It's June and you know what time that is. I'm Howard Freedland and this is your Echo Commercial First Half Report of 2023. Let's look at the state of the state in commercial real estate. In the first quarter of 2023, commercial real estate investment declined by 57% year over year. Global volatility, falling valuations, bank turmoil, and broader macroeconomic headwinds have drastically slowed CRE investment volume. According to CBRE, annual investment volume fell by 57% to $78 billion in quarter one. Institutional and international investors were the largest real estate purchasers, where private investors and REITs were sellers on average. Many firms, even those investing in favorable markets like multifamily and industrial, are waiting out the storm. Much of the reason is related to the federal funds rate exceeding 5% at the end of May, with 2 more increases expected by the Fed before the end of the year. More on that later. According to Green Street's Commercial Property Price Index, May prices dropped by 15% over the past year, following a peak in quarter one of 2022. According to the data from the price index, institutional quality building prices have dipped below pre-pandemic prices for the first time. Rising interest rates, lower occupancy, and uncertainty in financial markets have largely dampened commercial prices. According to RCA's Property Price Index, commercial prices continued to fall in March of 2023. Apartment prices saw the steepest decrease at 10.3% year over year, while retail fell 5.8%. Suburban offices fell by 5.6%, while central business district office prices fell only by about 2.9%. The RCA Property Price Index fell by 8% over 1 year. Florida, however, has seen stagnation and even escalation in certain sectors in CRE. Industrial and multifamily rent rates have gone up this year, while retail and offices slowed their roll. But look out. Effective December 1st, 2023, the state of Florida's sales tax rate on commercial real property lease payments, including base rent and additional rent, will be reduced from 5.5% to 4.5% for payments received for occupancy periods beginning on or after December 1st, 2023. Examples of taxable commercial real property rentals include commercial office, retail space, warehouses, convention and meeting rooms, and self-storage units. My projections for the back half of 23 and 2024 will be next week's focus. As high capital costs and ongoing inflation stifle transaction activity, the commercial real estate industry has largely shifted toward biding time until borrowing costs decrease and investments offer more attractive expected return. Furthermore, lending dropped significantly in the first half of this year. The CRE Lending Momentum Index declined by 33% quarter over quarter and 53% year over year. That's staggering reaction to bank failures, quantitative stagnation. I would put tightening, frankly, here, but that's only happened recently, and much higher interest rates. Deep Knowledge Investing's Gary Brode states others are saying that we've had historic decline in the money supply, which will lead to disaster. Technically, this language is correct, but ignores magnitude. Yes, M2 or money supply is down, but look at the chart below to see this historic decline. Do you see the problem? This has led to valuations falling as transaction volume stagnates or declines, depending where in the country you're looking. REITs or real estate investment trusts are selling more than they're buying, and investors with cash are hanging out until prices finally start to subside. Many are preparing for impending refinancing doom. I wrote 2 weeks ago that the Mortgage Bankers Association estimates that of approximately $4.4 trillion of outstanding commercial and multifamily mortgages, $728 billion or 16% matures in 2023, with another $659 billion, which is 15%, maturing in 2024. Approximately 25% of this is in the office sector. When these come due, the refinancing will be at a significantly higher rate than what the holders are paying, and decisions will have to be made. Next week, I'll put the back end of 2023 in perspective with my expectations for growth, the economy, and liquidity. I'm Howard Freedland with Echo Commercial Properties, and this has been your first half of 2023 analysis.